If you're interested in having more money tomorrow than you have today, or at the very least, not losing what you have, then there is only one winning strategy. Do this one thing to make sure you don't lose what you have. I'm going to play a clip here where Michael Saylor talks about preserving your wealth.
If you want to preserve your wealth, you have to convert that currency into an asset that's scarce, desirable, portable, durable, and maintainable.
It's got to be scarce because if there's so much of it, then anybody could get it, like sand. It also has to be desirable because if nobody wants it, it doesn't matter if there's only one of it if nobody wants it. It also helps a lot if it's portable. We live in a digital age, and if you can't transact at the speed of light, then you're going to be left in the dust. It also needs to be durable because you don't want something that falls apart, obviously. And it also has to be maintainable. Think about this in terms of real estate. If you have a bunch of properties and you don't pay the maintenance crews to come through and make sure that everything's working, it's going to fall into disrepair and the value is going to go into the dumpster. Now, some people think that maintaining their wealth means investing in the S&P 500. That's how they will preserve their wealth. Wrong.
Here's smart investors, people bragging about making money in the stock market. The S&P index is going up 7 to 8% a year. And so you must be really smart. You invested in companies that are making good decisions. Look at the money supply. The money supply is going up at the same rate as the S&P index. And so what you begin to realize is most investment gains aren't really gains at all. All you're doing is simply tracking the monetary inflation rate if you're lucky.
Let's say, for example, that your investments in the S&P 500 are going up by about 10% a year. Whoop-de-doo. What about the money supply? How much is that going up? Because if that is also going up about 10% a year, then you're not making any money. You're just treading water. Over the next couple of minutes, Michael Saylor goes over corporate risks. When you invest in a large company on the S&P 500, for example, these are what you cannot avoid. This will happen. You will lose 7% because of these various things. Management. The upper levels are going to pay themselves. The CEOs sure like their paychecks. Labor. The employees, they want paychecks too. You're going to lose 1% there. Competition. Other companies are going to try and eke in on that market because that's where money is. Number 4, technology. Other companies are going to come up with new technology, new ways to do things, and that's going to lose you 1%. Regulation. Number 5, laws are always changing. New politicians come in and new things happen where you're going to lose 1% there as well. Taxation. More of the same. You're going to lose 1% there. And 7, war. Who knows what happens, what kind of things will be taking place across the globe, but you're going to lose another 1% there. Whereas Bitcoin, on the other hand, you've got 7 attributes. It's cybernetic. It's across the entire world. It's digital. It's not tangible. You can't lose it that way. Number 3, the Immaculate Conception. Satoshi Nakamoto brought this to us, and for the last 13 odd years, Bitcoin has been running near flawlessly. It's got an uptime of something like 99%. Number 4, Bitcoin is immortal. All 17 plus thousand nodes would have to be destroyed, and it would all have to happen in about an hour, otherwise new ones would be spun up. And that's the only way you could destroy Bitcoin. Number 5, it's incorruptible. All 17,000 nodes share the same data, and they're constantly being updated. It cannot be corrupted. 6, it's global. Those 17,000 nodes I've mentioned 3 times now are all over the world on every single continent. And, as I've already touched on, it is truly indestructible.
If you had $1 million today in your company or in your family, and you hold it in cash in the world reserve currency at a 7% inflation rate, in 100 years, you will have, in today's dollars, $977.
If you do half into the S&P 500 and half into Bitcoin, you'll be up 500 times. Your $1 million will be $512 million. But if you go all in on Bitcoin, your $1 million today in 100 years would be worth over $1 billion. The only allocation to Bitcoin that is a problematic allocation to Bitcoin is 0. If you have no Bitcoin, it could lead to disastrous results. We've seen what so many other things have done against the US dollar, collapsed, and the US dollar itself is also collapsing. If all currencies are horses running to the glue factory, the US dollar might be the slowest one. It might be the last one to get there, but it will get there. Every single currency throughout the entirety of history has collapsed to 0. The US dollar is just the latest player in a long game played by dirty cheats. Bitcoin is the only honest and true player in this monetary game. So if you want a money that doesn't steal and cheat, get Bitcoin.